Data shows that GameStop short interest keeps on falling over the last 2 months from nearly 20% now to just over 16%. This on top of the exciting news that I brought you guys yesterday that over the last 12 months, institutional ownership of GameStop has driven up over 100%. Are the shorts finally on the run? Has Wall Street finally figured this play out? Are the shorts nervous ahead of the upcoming Q2 results? We're going to talk about that in this video. Let's get right into it. Happy Monday, guys. Let's get right into these GameStop numbers. Here on the short interest data table, if we look back in mid-June, the short interest was as high as 79.5 million shares. It has dropped now dramatically all the way down to 67.9 million shares. On top of that, look at this short volume, a huge decrease in the reported short volume, whereas before in just even late July, we had numbers 66% of the total short volume reported. Now it's dropped all the way down to 35%. Have the shorts abandoned GameStop? If that is the case, I'm here to tell you that is good news. Posts on X are buzzing and social media sentiment is high going into this Q2 earnings, especially considering some of this data that we went over here just in the beginning of this video and yesterday on the video I provided you for GameStop. This is a significant pullback in short selling activity at GameStop. Is this a sign that the shorts are easing off, possibly spooked by Ryan Cohen's strategic move to build up that cash, that liquidity on the balance sheet, the Bitcoin purchases that he's done, or are they spooked by the specter of a beat on the Q2 earnings, which we're going to find out about in just a couple weeks? Could this shift in the data be a signal that the bears have lost the willpower to short GameStop? A change in the strategy, if you will. The stock up today on Monday, almost 0.75%. Closing at $23.11. However, it should be noted with 67.9 million shares short, that's still a significant amount of money on the line, almost $1.5 billion bet against GameStop. Granted, some of that is the delta hedge put in place by the holders of the convertible bonds, maybe a very large percentage of that short interest. And that is not a directional bet against GameStop. That is just risk mitigation for that $4 billion of debt that they have on the line. And if I think about that, then the next thought I have is, the shorts willpower has just been destroyed in this play. The only ones really left in the trade are the ones that are protecting their bond bet. I still think that in the weeks leading up to the Q2 earnings here in 3 weeks or so, we have a good chance of continuing to see this bullish momentum on the chart. And keep in mind, as that price of the stock goes up, these convertible bond holders will increase their short bet. The short interest would go back up if the price of GameStop goes up. That is just how the delta hedge works. They're not trying to take a bigger bet against GameStop. It's just a larger hedge is needed to do the delta hedge properly. This is all finance math. We've gone over it numerous times on this channel in the past couple months, and I'm not going to repeat that and bore you again today, hammering home that topic. But go watch those videos if you want to get educated beyond the hyperbole, the hype, the hopium, and the nonsense put out by other folks on social media, and really learn what the convertible bonds are thinking. I've got a lot of great material put out there on YouTube for you guys to help educate you. Just go back several weeks, several months, and watch those videos. Look at the links provided in the video descriptions. The Q2 earnings are going to be a pivotal day for GameStop when we get there, because that is when we are going to find out, were they able to increase revenues year over year despite the company continuing to close stores? Has the collectibles business been positive enough to continue to positively impact margin contribution? And did Switch to make a meaningful contribution like some are alleging out there on social media? These are all important things that we're going to find out. And when we do, good or bad news, this stock is going to move one direction or the other. Cost to borrow remains low, meaning there is a lot of liquidity if you wanted to borrow to go short on GameStop. Again, more evidence that there are no shorts trying to enter this play. If there were a lot of shorts clamoring to short GameStop, you'd see that cost to borrow go higher and higher. And that is really one of the main things that I focus on any ticker, really, is the cost to borrow fee high. That is very important data to look at besides just considering the short interest. Low cost to borrow, not much interest from shorts in currently shorting the play. And, you know, if there is good news, then you get to keep on having the stock price go up. If there is bad news, it's cheap to borrow and they likely would pile on really, really quick. That is the fun, the speculative bet that we have here in GameStop. I cannot tell you what is going to happen, so make your own choices and own your decisions. It is just too hard for me to call with any certainty. With all the changes that the company is doing, very good changes, cutting costs, cutting locations, necessary changes, it's tough. It's tough to accurately guess the revenue or even the margins. And it has been amazing work that Ryan Cohen and the team have done over the last year or more than a year to get the ship from sinking. And now that they are floating, can we start really getting some momentum in the stock with better margins, higher revenues? That is what remains to be seen, and I'm here for that ride. The big thing that I hear from you guys over and over is, we don't like the official data. Tony, quit talking about the exchange reported short interest. We don't believe it. That is fine with me if you guys don't believe it. I think that as a reporter of integrity, it is important for me to talk to you about fact-based data, and this is the data we have. And the short interest is going down. So love the data or hate the data. The data's here and we're gonna talk about it. What you decide to do, trade on data or trade on what people on social media tell you without any facts, that is up to you. I am bullish on GameStop based on the fundamentals and the cash that the company has sitting on the balance sheet as a potential powder keg that could ignite better and better earnings if it is properly invested. That is my speculative bet on GameStop. Let me know down in the comments, what do you think about the short interest, and are you riding with Ryan Cohen? Thank you for watching, and I will see ya on the next video.